morning, everyone, and thank you very much for joining me. This is the morning market review with myself, Russell Shaw. I'm a senior market specialist at FXCM. Today is Friday, and it is the 14th of July. My email address, if anyone needs to contact me, rshaw@fxcm.com. And let's go ahead and bring up the disclaimers. Start off with the high risk investment warning. Hey, Derek. Good morning to you. Okay, let's take a look at the market commentaries disclaimer. Right, and just our references, MarketScope 2.0 and TradingView.com. And I want to take a look at cable. I want to take a look at the pound US dollar to start off with, and then we'll go into our normal analysis. But I think there's an interesting fundamental analysis to be combined with a technical analysis here that to me makes a certain amount of sense when it comes to the pound US dollar. And of course, if there's any comments around it, go ahead and type those in. So when we take a look at the weekly chart for the pound US dollar, we've put in some peaks and troughs here, haven't we? So we've got a higher trough followed by a higher peak, higher trough followed by a higher peak. Well, that's a series of higher troughs, higher peaks. That's an uptrend. That's the definition of an uptrend. Okay, so we've got a movement up when it comes to cable. Take a look at the RSI. That RSI is above 50, below 80. It's moving along nicely. So by and large, we've got a good looking pound US dollar. And the question is, can the uptrend continue? Can the uptrend continue? And if it can continue, then potentially we can take advantage of that, right? Good morning, Kim. Thank you very much for joining. So the idea here is there more, does the pound US dollar have legs, so to speak? And what I want to do is now go through to TradingView. And let's go through to this chart over here. Now, what are we looking at here? Let me put in the watermark and you'll be able to here we go. You'll be able to see. So this is the United States inflation rate. This is the last print, came out on Wednesday, I think. Tuesday. I think it came out Tuesday. It's dropped below 3%. United States. All right. So we're looking, remember, we're looking at cable. So what's the US inflation rate got to do with it? Fair question. Let's take a look at the United Kingdom inflation rate. Now, just before we go to the UK inflation rate, just bear in mind that this is the latest inflation print for the US. So this is the 1st of June. We don't quite have that data point for the UK yet. We're still waiting for that to come through. Let's just type in your United Kingdom inflation, okay? And that gives us this graph over here. This only goes to the 1st of May. So this only goes up to, we're still waiting for that June data point. We got the US data point for June this week. Okay, so just want to be very clear that we're missing one point of data. All right, so now we've got the UK inflation rate. It looks a little bit different to the US inflation rate. Okay, now we're going to do a relative strength analysis. What we're going to do is we're going to take the United Kingdom inflation rate and we're going to divide that by the US inflation rate. So it's a relative strength analysis. So what you're going to do here is just put divide and just type in United States inflation. We're not looking at the core here. We're looking at the headline. Okay. Okay. Just going to hit enter here, and now we've got a relative strength chart, and it's a little unfair because we don't have the June data point for the UK. So this kind of spark up here from May to June is a little unfair because we're not using all the data points. Just want to make that very clear. Nevertheless, I think it gives a fairly good idea of what's happening. Take a look at the trend in terms of relative inflation. So we've got the UK inflation rate as the numerator and the US inflation rate as the denominator. So if we are getting a movement in the northeasterly direction, it suggests that the numerator is getting stronger than the denominator. So in other words, the UK inflation rate here is way out of whack when we combine that with the United States inflation rate. So, and one of the major reasons for that is because US inflation is far more under control than UK inflation is. But when we do the relative strength analysis, we can really just see how out of whack the two are with one another. So if there is a relative skew towards UK inflation, the next part of the analysis, the next part of the fundamental analysis is that we look at the spread between the 2-year bonds, effectively the spread between the 2-year gilt and the US 2-year note. And I've got that on this screen over here, the top, the very top chart here. That is the 2-year gilt minus the yield of the US 2-year note. It's moving in this northeast direction. Let's just try and understand what's happening here before we move down. The central banks have a mandate, and one of that mandate is price stability. Price stability in central bank terms is 2% inflation. We're way off target, but the Fed is closer to its target than the Bank of England. So what they are doing is they are tightening monetary policy, and that is effectively making the costs of capital more expensive. You borrow capital, you're going to pay for it. But if interest rates are moving, if yields are moving, costs are moving up. That's effectively what tightening monetary policy means. Well, the short end of the yield curve is a good proxy for that because it adjusts quickly to the changes in the costs of capital. So as the costs of capital change, so we can see the spread is moving that northeast. Who's benefiting, or whose spread is pulling away? So the UK spread is pulling away from the US spread. In other words, there is a thinking by the market that the Bank of England is the more aggressive in terms of its monetary tightening. Okay, so that's what's happening. So we've got a strong relative inflation that's skewed towards the UK. As a result, the monetary policy is skewed towards the UK. And as a result, take a look what's happening. Here is cable. Here is the pound US dollar. This is the weekly. It's moving in that northeasterly direction. Okay, and then I've got a correlation coefficient. The correlation coefficient is a really strong 92%. That's a very, very strong reading. Why is it strong? Because, well, you can only go up to 100%. We're at 92% here. So there's a strong correlation between the 2-year yield spread and the pound, and I bet you if we had to do a correlation between the 2-year spread and the relative inflation, we would of course get a positive correlation there as well. So what are we saying over here? We're getting quite deep here. What are we saying? We're saying as long as there is a skew in inflation, okay, as long as there's a skew in inflation, pound US dollar is likely to be supported. It's likely to be supported. Now, we did get data out of the UK this week. We got jobs data, and one of the data points for that wage data was earnings. Earnings are coming in hot as well. So the idea here is that when there is companies and they're paying their employees a higher wage, well, what they tend to do is pass that expense on to their customers. So they raise the prices of their products. Well, that turns into a spiral, okay, because it becomes more expensive to buy products. You demand a higher wage. Well, if you get paid a higher wage, that gets transferred to higher prices. Well, you're paying higher prices. Well, you want a higher wage. It spirals out of control. So the Bank of England now has to really watch it very, very carefully. A wage spiral can really be serious. So we can see that that is having an effect on pound US dollar. So if we go back to market scope, we can go through to our daily chart. Now this is where it gets a little bit complex. Okay, this is where it gets complex, but exciting at the same time. We've got an overbought condition on cable on the daily. I'm of the opinion that that has to clear. I don't think we can stay overbought for very long. It's on a daily, so it's much more useful than, say, an overbought condition on a weekly in terms of timing. I think that the cable pairing has to normalize sometime over the next few days, and that normalization is potentially a dip in the uptrend. Okay, so if we get some sort of pullback over here, all right, then we can try and exploit it to the upside. So it's very interesting to see that there is an overbought condition when the fundamentals, to me, seem to suggest support for the cable pairing. So any sort of pullback here, I think, is something that we've got to be wary of. It's something that we should, put on our watch list. I think we put cable on our watch list. Now, as long as we stay overbought here, there is going to be a heightened risk, because I don't know when it's going to normalize. I know that it's most likely going to normalize, and the normalization could be a deep pullback. I don't know, but so as long as we're overbought here, there's heightened risk. I can see there's some sort of red that's taking place on cable now, and it's pulling back, say, towards the central pivot, and if that doesn't hold, pulls back to S1. Those could be sort of potential support areas where we may get some sort of buying coming back into the market. Again, you've got to make the choice whether you want to get involved in the market at those levels, because as long as we stay overbought over here, in my opinion, there's heightened risk. And I think that it's going to be a much more comfortable pairing to analyze when there is a normal looking RSI. What's a normal looking RSI? Under 80 for overbought, over 20 for oversold. So keep that in mind. What's interesting now is we'll do a US dollar analysis. Again, a top down. US dollar has evolved over the last few weeks, and it's evolved into a trend. Okay, so it's broken down. We've looked at it in terms of the sideways consolidation, the symmetrical triangle. You can see that it's broken down out of that symmetrical triangle. So the breakdown is interesting. The fact that the RSI is below 50 is interesting, but where it really becomes important is when we do a trend analysis, and the trend analysis is done with peaks and troughs. So you can put in a reference peak over here, you can put in a reference trough over here. Once you've got the references, it becomes easy to see that we've got a lower peak, and once we've got a lower peak followed by a lower trough, which we do, that's a defined downtrend. Dollar's moved into a defined downtrend. Now, in technical analysis, we tend to suggest that the trend is your friend until it ends. So as long as we've got a downtrend in the dollar, technical theory suggests that's going to ripple through to the other instruments. Well, again, we can see not only the underlying fundamentals of the inflation benefiting cable, but the fact that the dollar has been pulled down, I think that's another tailwind as well, isn't it? So something that we can keep an eye on. Now, go through to the daily chart, and here's where it gets interesting again. We are oversold. it's perfectly reasonable to expect a bounce in the US dollar, because the likelihood of staying oversold for long is, in my opinion, is long odds, right? So the idea here is, okay, some sort of pullback that pushes us into a rally, potentially a shorting opportunity. Got to be very careful. I can see there is some blue that's starting to appear on the downtrend. Again, I'll caution you that as long as we stay oversold here, there is heightened risk. And when we go down to the hourly chart, again, the central pivot and the R1 become quite interesting. I wouldn't say compelling. And the reason I say not compelling is, again, I want to just hammer this home, is that the oversold condition is skewing the risk reward profile. We've specifically, in this particular analysis, we've specifically put in the RSI to suggest when there's heightened risk. Well, there's heightened risk here. Now, what that means for us, I think, is patience. I think that if we patient here, we let the market conditions normalize, we let that froth dissipate, we're going to be in a much better environment to look for exploitable opportunities. Okay, let's just take a look at gold, because gold's also interesting, and then we'll end off with DAX. All right, I want to go through to the weekly chart here. Now, gold to me is a very difficult instrument to read on a technical basis. And the reason for that is, well, we've only got a reference peak and a reference trough. We don't have any other peaks and troughs to work with. So we don't have any data in terms of, well, which way are we trending on a primary basis? I can't tell. I can say that the uptrend has ended, but I can't say for any certainty that a downtrend is in force. So we're kind of in no man's land here with the gold instrument. What we can do is try and finesse it. We are not as confident here in terms of if we've got a trend, but what I can say is that it does look as if we're going to get a bullish reference candle in here. Here's the reference candle. It's the lowest low in at least 3 candles. And then the fourth candle here, okay, so this is actually the lowest low in 4 candles. The fourth candle here looks like it's going to close above the reference candle's high. So that's a bullish reference candle reversal. It does seem as if the momentum is shifting positive. That makes sense. That makes sense given that the greenback's pulling back. Now, the fact that we've got no real peaks and troughs to work with here suggests to me that we put a fair amount of weight on the dollar analysis. What's the dollar? It's oversold. If there's going to be a bounce in the dollar, then I would expect gold to pull back somewhat. But the lack of trend here is something that, unfortunately, something that we have to try and pass through. I do see that the gold chart is sitting in zone 1, okay, and again, potentially, I say potentially, the S1 pivot is potentially a support area. It does look at face value as if it does have an overlap with price support. Again, I want to reiterate, we're really going to depend here on if the market clears that oversold condition on the dollar. So be very, very careful around that. Last chart. Let's take a look at DAX. All right, so the DAX for me is a complex chart. So what I've drawn in here is we had a series of higher troughs followed by higher peaks until this point. And then we actually got a lower trough coming in. That's very much like gold in that we don't have enough peaks and troughs to work with. Let's get rid of the trend lines because I think they're confusing. And let's just keep the reference P and T in. This is, and again, it's an uncomfortable chart for me. DAX has had a very good week, but this is actually an inside period. In other words, the downtrend, sorry, the uptrend has ended. We're not in downtrend. We're not in downtrend, but we do have an inside period here. In other words, it's completely the range of this week's candle is completely within the range of last week's candle. The bulls really haven't had the fortitude to take price higher than last week's price, and the bears haven't taken price down. So there is an element of indecision in DAX. We can perhaps default towards the RSI, which is above 50, suggesting that there is still some positivity there. If that is the case, well, we have gone into zone 1. We have gone into zone 1. Interesting, we still have the option of perhaps a lower peak here, but I think let's take out the peaks and troughs and monitor this rather in terms of the zones. And we have gone into zone 1. The reason that I think it's more appropriate to use the zones is we have gone into earnings season, and the earnings season's actually started off pretty well. We had PepsiCo, Delta out yesterday. We're getting the banks out today. Okay, so the big banks are coming out today, and they may influence US markets, and because of sort of the global nature of risk markets, that may flow onto global risk markets, including DAX. So we have got movement here into zone 1. I don't like the fact that we are in an inside period. I don't like the fact that we don't have peaks and troughs to work with, but perhaps we default through to the RSI, which is on the positive side of 50. And if that is the case, we can take a look for support. And the support, well, perhaps S1 here, perhaps S1, maybe the central pivot, but we've got to get some sort of positive crosses here. Why I say the S1 is because there seems to be some sort of overlap there. I suppose there's overlap on central pivot here support, and then here support. So the central pivot S1 levels seem to be the levels to keep an eye on. We have gone into earnings season. I think that could potentially positively affect DAX. We've got to be careful. We are missing some peaks and troughs with DAX. Also, just to reiterate and belabor the last point, cable looks fundamentally supported but overbought. Dollar looks weak but oversold. Be careful. Be careful with those conditions. All right, that's where we'll leave it this morning. If there's any questions, go ahead and type those through. Any questions, go ahead, type those through. Hey, Anna. It's a pleasure. Welcome back. All right. Let us conclude then at this point. Have a great weekend, guys, and I'll see you on Monday morning. Thanks very much.